A lot of discussion about Boeing today, up sharply in the pre-market after this much narrower than expected quarterly loss and a revenue beat. Our Phil LeBeau is in Charleston, South Carolina this morning with Kelly Ortberg. Morning, Phil.
Good morning, Carl. Kelly, it's great to be here in the plant that builds the 787 Dreamliner. Carl set us up there perfectly by talking about much better than expected results for the first quarter, and in particular, free cash flow. Are you still on target for positive free cash flow in the second half of this year?
Yeah, we sure are. We did get off to a little bit better start here than we anticipated, particularly in our commercial deliveries. We delivered 130 airplanes, which is ahead of our plan. So as you saw, a little less cash burn this first quarter. So we're well on track for that recovery to return to positive cash flow in the second half of the year.
You're taking back some planes that were supposed to be going to China. They were ordered by Chinese airlines. And you've got a number that are either in production or in the order book. How many will you take back, and what do you do with the ones that are starting production but they're not yet ready to be delivered?
Yeah, Phil, we have 3 airplanes that we had in China ready for delivery. I think we've got 2 of those already back, and we're bringing the 3rd airplane back. They have, in fact, stopped taking delivery of aircraft due to the tariff environment. We have roughly 50 airplanes in our plan this year going into China, so we're going to be pretty pragmatic with what we do here. For those airplanes that haven't been built yet, we'll be looking to maybe redirect those to other customers. For the airplanes that have been built, we call it remarketing. There's plenty of customers out there looking for the MAX aircraft.
How long do you wait?
Well, we're working with our customers right now. We're not going to wait too long. I'm not going to let this derail the recovery of our company. So we'll give the customers an opportunity. If they want to take the airplanes, that's what we'd prefer to do. But if not, we're going to remarket those airplanes to people who want them.
Kelly, Jim has a question for you. Jim, go ahead.
Thank you, guys. Hey, Kelly, I was very worried, as you know, about the free cash flow situation. It looked pretty grim. To hear any progress along that front would make me feel like that this is the right stock to own. Where are you?
So, Jim, we're in great shape. We had the big capital raise at the end of last year, brought in $24 billion. Our cash balance is better than we anticipated, and really it's all around the MAX production rate. We're producing MAXs at about 31 a month right now, low 30s. We will be ramping up here over the next few months and get to a 38 a month rate. We're capped there with the FAA, but we have a plan to move beyond that yet this year. So I feel pretty comfortable with the overall balance sheet, and recognize that we just made announced a divestiture of some of our digital business for $10.5 billion, which will also solidify our balance sheet going forward.
All right, and could you talk about the cadence of what you would have? I mean, because I think that I had thought that things could, if everything went right, you would get a few more each year. That's not correct. It's more each quarter, correct?
I'm sorry.
In terms of the MAX production, it's not just 1 or 2 increase a quarter. It's a sizable increase when you start ramping up.
Yeah, that's right, Jim. We will increase at 5 airplanes a month when we go through rate increases. So the first one will be 38 to 42. The next rate increase, likely about 6 months after the first rate increase, will be from 42 to 47, and we want to be in the mid-50s when we get production stabilized.
In terms of the tariffs, so much is focused on the fact that you are the largest exporter of anything in this country, in terms of value, certainly. And then the question becomes the tariffs that are being put in place, whether it's USMCA related here in North America or foreign production, like you get the wings for the Dreamliner from Japan. Right. How much is this impacting the cost? If this goes on for the rest of this year, will you be able to bear the impact cost-wise?
Yeah, we think we'll be able to manage this within our cash flow plan, and it won't deteriorate from that. Recognize that there are drawbacks on some of the tariffs. So the tariffs we're paying, for example, in Japan and Italy, for those airplanes that we deliver outside of the U.S., we're able to draw that back. And 80% of our aircraft right now are going outside of the U.S. So we think we'll be able to manage through the input tariff environment. The bigger issue is making sure that our supply chain stays healthy and we continue to see the supply chain making the deliveries, and the tariff environment doesn't slow things down in the supply chain. We haven't seen that yet, but we're really watching.
And that's a possibility, that somebody farther down the line says, I can't pay this.
Right.
And if they don't produce, then you can't produce, right?
Yeah, and that's more a continuity of supply issue than it is the actual 10% tariff. So one of the things we're doing is working with our suppliers to see if we can't help them also with this tariff drawback environment, and maybe utilize our drawback ability to help them also get recovery.
777X, what's your outlook in terms of, as you look at the progress you're making there, when do you expect that you get the certification and you can say, okay, we start to move towards production here and deliveries?
Well, the short answer is the end of the year, but the airplane program's marching along. We're in flight tests right now. The airplanes are flying every day. No new issues on the 777 flight test program. So we've got a lot of work to do with the FAA to get through the cert, and we want to get that done here by the end of this year so that we can start delivering those airplanes.
And with regard to Starliner, more missions?
Yeah, more missions on Starliner. We're working with NASA to make the corrective actions from the thruster issues that we saw on the last flight. It's pretty straightforward engineering work. We know what the problems were, and we're making corrective actions. So we'll hope to do a few more flights here, in the coming year.
You're confident you've licked the problems there?
Yeah, we are. It's pretty straightforward. I think we know what the issues are, and I think we have straightforward engineering solutions to those issues.
Kelly, thank you.
Hey, thanks, Jim.
Hey, guys, I'm going to send it back to you.
So this is Boeing on the daily. We have the weekly, and we have the monthly chart. If we zoom out to the monthly chart, we can see that we have a baseline or support down in this $100 to $120 level, and then we have resistance at this weekly sell level at $280. Now let me show you a setup that did not pan out because the overall market corrected / went into a bear market. And when price broke this downtrend line, it formed a rally in price, one basing candle, and then the rally out. And so this was setting up, telling us that there were smart money leaving their footprints at this weekly buy level at 155. And depending on how you would have traded this, as you can see, price did pull back. Depending on, like I said, if you waited for confirmation that price was going to move higher, well, this would have been good for at least a 2.5 to 2 or to 1 reward to risk ratio. And so let's zoom down now to the daily chart just to see how one would have gotten into this trade. So this is the daily chart, and as price was coming down, it did form some daily buyers, or sellers rather, drop, base, drop. However, one could have went long on this bullish engulfing candle. That would have been my entry to get long, despite the below average volume again. And on the daily chart, what you can see within this weekly zone, you had two levels. You had buyers here and buyers right here. All right, so let's reconstruct this chart because this zone is no longer valid. Again, zooming out to the monthly chart one more time, you have a floor or support at 120. Ultimate target becomes roughly $280. Now potentially we have a setup taking place. Rally, basing candle, rally out. Again, this is the weekly chart. However, this zone is not valid yet. We need another extended range green candle. That would take out the most recent local resistance. And so next week, if we have another bullish week, this level becomes valid. And the trade setup would be buying a pullback. Again, looking for the second half of the year target to come in at this weekly sell level at $280.